Good morning, traders. It is Tuesday, October the 16th. Taking a look at the morning charts, you can see we've got the US dollar index, and we've seen this more or less double top in the US dollar form in the resistance zone, this orange level. And yesterday we saw it come up in pre-market, come up, test this little breakdown level here, and then we saw it reverse yesterday afternoon. In overnight trading, we've seen the US dollar continue to erode. It looks like it's starting to work its way lower, and with any luck we will see it continue to head down. But overall, the equities market is kind of giving off some mixed signals, which I'll cover at the end of the video. But overall, the weakness here in the US dollar is going to somewhat lift stocks and commodities for a few days as it maybe comes down to the support zone. We'll see how much of an effect it actually has on the stocks and commodities. And usually for the size of move that we just had down this morning, we should see a pretty good pop in commodities, though we're not really seeing crude oil move up much. Precious metals really aren't moving. Equities are moving up this morning, but not nearly as much as I really think they should be. So it's going to be interesting the next couple days, and I'll explain the reasoning for I think what's unfolding here going forward. Let's take a quick look at crude oil. Here's the crude oil chart. This is that rounding formation. We're just zoomed in a little bit. Looks as though it's trying to build stability to break above this little basing pattern right across here. If it can break that, then 96 is going to be the next target, and 100 will be the following target if it can break through that. Overall, we've seen a nice thrust to the upside. It's been consolidating. We had a little bit of a dip yesterday morning, and it's come back nice and strong. It's holding up well here. Again, if the US dollar will continue to erode, then we may just see this actually break out, run to its first level, take a breather, and then it may end up taking a run at the 100 level shortly after that. But we'll keep our eyes posted for a bullish pattern here, or possibly a nice tight handle underneath this breakout zone with proper volume on the intraday charts, giving us a really tight mini bull flag that we could get into with a very low risk entry and see potential for a breakout there. Looking at natural gas. Natural gas yesterday really pulled back pretty hard yesterday. It was down about almost 4.5% at one point. Overall, it's forming a little bit of a bear flag. You can see it just kind of drifted higher in overnight trading with no volume, which is a bear flag, and it's starting to pick up momentum back to the downside. Now just zooming in here, you can see we've got a little bit of a support zone right across here, this previous pivot low from yesterday. So we've got this down thrust, bear flag. These are all inside candles, meaning they're inside this one big candle. That's a bearish sign. And now we're starting to see it pick up speed to the downside. Now once it breaks below this level here, I wouldn't be surprised if we see the next measured move, which will be more or less the size of this candle. You can just flip that to the downside, and we'll be looking at it to come right down into around this level here, the 340, which is also right through the heart of all this consolidation here, which will act as support. So the chart is showing a nice clean measured move that falls in line with where key support should be. So I wouldn't be surprised if natural gas falls down to the 340, and if we do have more pressure and it breaks below this pivot low here, then we're going to see it fall much sharper. Overall, you can see where these support trend lines are all the way down to the 280, so it's very lofty way up at these levels, and there's lots of room for it to really fall out of the sky and have a big pullback. Looking at precious metals, here's the gold chart. You can see here, yesterday, the last couple of days, we started to kind of pick up speed to the downside with some more or less distribution selling. All the volume spikes are selling volume. One mini bear flag after another. We're still forming another mini bear flag, and here you can see we've got another inside day, meaning we've got one big down candle, and all these little candles here are within this one candle that is a very bearish pattern. Usually once the sellers step back in, it will just continue to work its way lower. Looking at silver, pretty much the same picture. Just zoom in a little bit here. Big down candle again, and these are all inside days. We've got 1, 2, 3, 4, 5, 6. So today or tomorrow, I wouldn't be surprised we see sellers step back in and really push things even lower. Gold miners, they have pulled back into a key support area, had a nice little bounce yesterday. But overall, they're coming back. They broke down in below the support zone where it stopped and pivot a couple times before. Now we're kind of below that level and we're stuck at it. Overall, it's still consolidating, but we are stuck in a little bit of a downtrend, and I wouldn't be surprised if equities roll over, and same with precious metals, and this is going to continue to work its way lower into this key support zone, which will be right through the heart of this previous kind of breakout level over here around the 50 mark. Bonds, we've seen money rotating slowly out of bonds. Came up, hit our head on this resistance level, and it's been dropping down. This morning we're seeing it pick up speed to the downside. Generally when bonds go down, we see equities rally, and we are seeing equities, they're going to gap higher this morning at this time. Quick dip in bonds, and we're seeing actually a pretty good little surge in equities this morning. Now looking at this chart here, just zooming out a bit, we've got potential for it to come down for a possible double bottom around the 145 area. So there's lots of room for it to still fall, but overall it's still holding up nice in this pattern, and we're just going I don't really want to get involved with bonds right now. I'd rather be looking at the equities market or crude oil, and we'll just see how this unfolds going forward, and if it can pick up speed and make a lower low here. Looking at the SP 500 daily chart, this is kind of where we're getting some mixed signals. Right now we are getting, if I just zoom in a little bit more, you can see we're starting to get the 20-day moving average is starting to turn red. It's starting to actually head down, and that's a bearish sign. Also, we're seeing our momentum, this pink line here, our intermediate trend here is now below the 50 level mark. When both these are together, generally the market is oversold on the initial down thrust, which we were. Our short-term cycles have been bottoming out here for the last about 4 trading sessions, and yesterday we started to have a bounce. On an intraday basis, we actually were a little bit overbought, but the short-term cycle still has some room to come up. But the fact that we've got the 20-day moving average coming down, we've got our intermediate cycle now below the 50 mark, meaning there's going to be more down pressure. I think we just get this pop in equities, and we may see it rise all the way up somewhere to hit its head on a resistance trend line up here, or just the 20-day moving average today, which it's gapped up to. It'll be trading at this morning at the open, but I do feel as though sellers are going to step in and they're going to put some more pressure, and we could see it really start to shift to the downside. So the overall pattern here, while we're oversold and we're starting to get a bounce, as much as I wanted to get in there, the fact that we've got moving averages rolling over, we've got our major cycle actually rolling over and heading lower, both those things mean we're oversold on the short-term basis, and we're going to get a pop. But I think this bounce here that we're going to get in the next couple days is going to get sold, and we might see much sharper prices and really see these stops start to get run. And again, this intermediate cycle, once it breaks below this 50, usually we can see it continue to stay in this lower zone for 6 to 8 weeks, and that means we could see it quite a long kind of pullback in the equities market. Looking at the SP 500, this is the futures chart. This is the past 2 trading sessions. On Friday we saw the market close right here, and yesterday morning we saw the market open up here. We saw it come down, fill that gap more or less, and then it had its morning rally, and then it had its afternoon kind of counter trend pullback, and then the end of days continuation trend. And in overnight trading, we've seen the market kind of slowly drift its way higher, and this morning we're really seeing it start to pick up speed. But you can see we're coming into these resistance trend lines. If we just zoom out on the chart, you'll be able to see where these fall. There's different peaks, different levels, and again we've got a key resistance zone coming right across, right about here. And again, this is the futures chart. It doesn't look the same as the SP 500. Yeah, you get these big spikes that happen actually pre-market or post-market that throw it off, but during regular trading hours we're squeezing up into a resistance zone, and we could see it work its way a little bit higher. But overall, I think the market is going to start to get a little overbought, and we're going to see some pretty sharp price action, very similar to what we see something like this or like this, where price really ramps up. And now that the momentum is now down, and sellers are, I think, starting to be in control, these big price jumps get sold into very quickly. These surges to new highs are pushed off and sold off very sharply. So I think that's kind of where we're going. We may see the market squeeze for another day or two higher, but overall a big spike up I think it means we're also going to get a big spike right back down and then continued to work its way lower. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.